Good morning and welcome. You're watching Market Cafe on ET Now with Ankita and myself, Harsh Saita. In this show, of course, we take you through all that's happened in global markets yesterday, as well as global news, and then we move to domestic, news across the domestic front as well as then stock specific. So Ankita's first going to take us through all that's happening in global markets.
Good morning to you, Harsh. Now, markets are acting pretty crazy. I mean, look at the data that's come out of the US markets. And despite all of that, the stocks have rallied yesterday. Now, yesterday, traders were looking towards a strong retail sales number along with the latest inflation data. Remember, that came out, CPI number data that came out, and that was higher than what was expected. Even the retail sales number came in stronger than the consensus forecast. It was up 3% on a month-on-month basis as opposed to the estimates of 2% on a month-on-month basis. Now remember, that indicates that obviously there's more consumption. The retail sales are high, the job market is strong, labor market is resilient, which all already points towards that the fact that the inflation is sticky and also paves the way for higher interest rates by the Fed. But despite that, the Dow Jones Industrial Average gained 38 points or was up 1.1%, rallying more than 250 points from its intraday lows. The S&P 500 ticked up 0.2%, lifted by shares of Solar Edge and Generic, which gained 9 and 8% respectively. And the Nasdaq Composite rose 0.9%, boosted by shares of Airbnb, which surged 13% after beating the earning expectations. And that was what happened largely in the US markets. Now look at the European markets. European markets bucked a global trend to end the day higher. Stock 600 reversed the morning losses and provisionally closed up 0.5%, more than 0.5%, with most of the sectors ending in the green. FTSE hit yet another record high, breaching the 8,000 points threshold for the first time and ending the session 0.5% higher on the day. UK CPI data also came out yesterday. Published showed that the inflation fell for the third month in a row in January to hit 10% below the Reuters economists' expectations, near 10.3%. So at least in the UK, the inflation came down below the expectations by 0.3%. Major bourses were even stronger. If you look at France's CAC, that was up 1.2%. DAX was up 0.8% in trade. That was largely the roundup of the US and the European markets. That's the handover coming in. Harsh, what about crude? Is crude giving us any direction?
Well, crude largely flat, Ankita, if I were to sum it up in a couple of words. But let me take you through a couple of data points. One is that the US has, increased their crude buildup by quite a bit. They were expected to grow their crude buildup by only 1 million barrels, from 455 to 456 million barrels. But they've done so by 16 plus million barrels. So they've really exceeded what analysts were projecting in terms of the crude buildup. But the strong retail sales data, that's the other piece, has pushed the dollar index higher. So if you look at the dollar index, it's gone up to 103.7 now. It was around the 103.3 mark yesterday. So that 0.5% gain will obviously pressure crude prices lower. So we're seeing a couple of those factors play out. Currently, oil is at $79 a barrel, which is WTI, and Brent is at around $85.50 a barrel. But I'm going to take it straight back to Ankita. Talk to us about what events to look out for today.
Right, Harsh. Now we quickly take you through the events for the day. Now we have it is the last date to trade in Inox Leisure's share. Also, Triveni Engineering's buyback offer starts from today to March 1st, and Eclerix Services buyback closes as of today. Now we also have Chambal Fertilizers and Shree Cement, for which today is the ex-dividend date, and we have the last day for dividend shares for Balakrishna, Hero MotoCorp, NHPC, REITs and Page Industries that will have the last day for dividends. Now that was the event, roundup of the events. Over to you, Harsh, for more global news that's coming in.
Well, yes, we'll get straight to it, Ankita. US President Joe Biden warned union workers about the state of the economy. The president argued that the rival GOP plan would increase the debt by more than $3 trillion over the next decade. Biden argued that his budget will ultimately cut the deficit by $2 trillion over the next decade. The president has yet to release his budget plan but has promised to do so by the 9th of March.
And in the latest development from the ongoing China-US balloon saga, China has now claimed that it has spotted US-owned high-altitude balloons over its Xinjiang and Tibet regions. China has gone on to threaten to take measures against the US entities that undermine Chinese sovereignty. Now, earlier, China had claimed that the US balloons had flown over its airspace without permission more than 10 times since May 2022. The White House has disputed China's allegations.
Well, an ace investor, Charlie Munger, said that Tesla pales in comparison to BYD in China, calling the Chinese electric vehicle maker his favorite stock ever. BYD has been a lucrative bet for Berkshire, which first bought about 220 million shares in September of 2008. The stock has jumped more than 600% in the past 10 years amid the massive growth in electric vehicles.
And World Bank President David Malpass said he would leave his post well before his term ends. This is after months after running afoul of the White House for failing to say whether he accepts the scientific consensus on global warming. Malpass survived multiple calls for his resignation last fall and was not expected to be offered a second term.
Well, and switching over to something that, we don't cover much, Scotland. Scotland's First Minister, Nicola Sturgeon, resigns from her post after serving for 8 long years as Scotland's First Minister. The Scottish National Party leader made her resignation announcement at a press conference in Edinburgh earlier today. According to reports, she will stay in office until a new leader from the Scottish National Party is appointed. The 52-year-old said that her dominance over her party and the country was no longer the asset it once was in the fight for an independent Scotland, adding that she had become too divisive and too tired to lead that fight anymore.
And Cisco reported better than expected fiscal second quarter results. The company lifted its forecast for the full year. Shares of the computer networking company initially jumped in extended trading before paring most of the gains. Cisco's total revenue grew 7% on a year-on-year basis in the quarter, which ended in Jan 2028.
Well, Elon Musk said that he might be able to appoint his new successor as Twitter CEO by the end of 2023, but first needs to stabilize his social media company. Musk took over as CEO of Twitter in October as part of his $44 billion acquisition of the social media giant. In December, Musk tweeted a poll asking people whether he should step down as the head of Twitter. The majority of the 17.5 million votes said yes.
And the death toll from the devastating earthquake in Turkey and Syria touches 41,000. Rescue teams in southern Turkey say they are still hearing voices from under the rubble more than a week after the earthquake. 2 women were pulled from the rubble in Turkey even as hopes to find survivors from last week's devastating earthquake dwindled.
Well, truly difficult scenes out there coming in from Turkey and Syria. But with that, we'll slip into a very short commercial break. More on the other side, of course. Welcome back. You're watching Market Cafe on ET Now. Let's quickly move over to domestic news. India's merchandise trade deficit in January hit its lowest in a year at $17.75 billion, according to reports based on data released by the government. Excuse me. January merchandise exports were at $32.9 billion compared with $34.5 billion in December, while imports fell to $50.7 billion from $58.24 billion, data showed. Export of petroleum products, electronic goods and chemicals continued to be higher than a year ago, while a weak global demand resulted in a drop in outbound shipments of cotton, engineering goods, iron ore and jewelry.
And Finance Minister Nirmala Sitharaman said that the window for petroleum products will be brought into the GST gambit was open. She added that it was up to the states and the GST Council to agree on bringing petroleum products under the gambit of GST while she was speaking at a post-budget session. Listen into what she had to say.
GST, gas, petroleum, the provision is already available for petroleum and natural gas, petroleum products to be brought into the GST. My predecessor had already made the window kept open. Once the states agree, we will have the petroleum products also be covered by the GST. So that's not so much us not wanting it. It's the entire council saying yes. And saying yes, not just yes, because it's already in there. What they have to do is to determine a rate. And once they tell me the rate, we get it into the GST. MSMEs have all been always in our mind since 2020, when the pandemic hit us. A festering problem for the MSME has been payments don't reach them in time. Big industries, whether they are public sector or private, delay payments beyond 45 days. And therefore, this budget addresses that as well, because we've always been nudging industries, inclusive of public sector undertakings, nudging them to say, please do not delay payments which are due beyond the 45-day reasonable limit. And over and above the nudging, we've now come to say that you can't, those who have dues to pay for the MSMEs can't really take advantage of set-offs in that financial year. The year in which you actually pay them is the year in which you can actually claim set-offs. So MSME from various different angles have been given priority, and the accelerator fund, which is also being created, will also help the MSMEs.
Well, that was, of course, the finance minister speaking about MSMEs as well as oil and GST. Let's quickly take it to food delivery. Big swing there. Swiggy is selling its cloud kitchen business. Does it indicate that the firm is one step closer to an IPO as it focuses on profitability? Vinny has all the details with us.
Absolutely. What Swiggy is actually looking to do before it actually comes out with an IPO is to offload its kitchen service business. Now, let's just take a look at what this kitchen service business is. And, Swiggy obviously wants to look attractive. We've seen how those new age tech companies have seen a correction coming in valuations. So Swiggy is tightening its ropes, doing everything so that, it offloads the businesses that are not doing too well for them, not yielding profits, and only keep those operational businesses which are yielding profits. Now, Swiggy's this kitchen infrastructure vertical is called Swiggy Access. It was opened up around 5 years ago, and this was mainly to provide services to restaurants so that they can run their cloud kitchen business. So obviously, they did not manage to yield in terms of substantial profits from this venture, and they had almost 200 locations when they opened up. Now they had around only 30 to 35. So yes, they are looking to offload this before they actually come out with their IPO or go and move forward with their IPO works. Now, what they're looking to do is they're looking to sell this off cloud kitchen service business to a company called Kitchen at the Rate. Currently, Swiggy Access has a valuation of around 83 crores, while in terms of Kitchen at the Rate's valuation is around 331 crore rupees. So yes, they will be looking to offload this, and maybe it will happen through a share swap deal. And this is all according to ET reports. So let's keep an eye out on this interesting deal. We'll keep you all updated. As of now, this is the update we're getting on Swiggy.
Moving on from Swiggy to Indigo, the promoters of Indigo's parent company are reportedly looking to sell $350 million worth of shares through a block deal. Now, this after Rakesh Gangwal, the co-founder of the largest air carrier, said he would look to reduce his holdings in the company after stepping down from the board. And the promoters have set a floor price of 1,875 rupees per share, which is a 6% discount from the last traded price. Reports suggest that Goldman Sachs has been roped in to broker the deal.
Well, yes, thanks for that, Ankita. I'm going to quickly take you through what's there in store for you on the market, right? We have Ramesh Damani, ace investor, member of the BSE at 9:20 on his perspective. and in the show market makers. Quickly moving on, we have Shalabh Saxena, who's the MD CEO at Spandana Spurti. Of course, they declared results last week, but he'll be in today. 9:45 a.m. is when you can watch him. Sticking with earnings, K. Natarajan, who's the ED and CEO of Galaxy Surfactants, will join us around 10:20 a.m. And Bhanu Chopra, who's the founder and MD of RateGain Travel Tech, will join us at 10:35 a.m. All of them on earnings. So keep your eye out on the lineup with regard to the market. Welcome back. You're watching Market Cafe on ET Now. Let me quickly take you through what Asian markets are up to. US markets, of course, closed in the green. We're seeing US futures marginally high as well, trading with a positive bias. But Asian markets too are trading positive. So on the back of those couple of good developments, Asia is looking in the green. We're looking at the Nikkei, which is up around 0.75%. We're looking at the Kospi, which is up over 1.5% in early trade. We're looking at the Hang Seng also up over 1% in trade. We're seeing the Shanghai up around 0.25%, and we're seeing gains on the ESX 200 as well, around 3/5 or 2/3% higher now as we speak. So that's where we are, where Asia is concerned. Let's also talk about gold. Gold prices are currently at $1,850 an ounce, and bond yields, the US 10-year bond yield has now reached 3.8%. So that's inching higher on the back of stronger retail sales, with the Fed having the bandwidth to continue to hike rates and target inflation. That's where we are at, where Asian markets are concerned.
And we have Lisa with us in the studio with all the stock specific action. Lisa, tell us what are the stocks that we need to watch out for in today's trading session?
Well, a very good morning to all. Starting with the Adani stock, MSCI has delayed the implementation of a lower weightage for Adani stocks, and the delay will be on till May 2023 review. The delay has been due to potential replicability issue arising due to the impact from the price limit mechanism. And please note that on Feb, MSCI had announced reduction in weightage for the Adani stock. Moving on to some corporate action, Triveni Engineering buyback tender offer will open today, and that will go on till March 1st. Also, it is the last day to trade Inox shares, as it is the last day for the shareholders to be eligible to receive PVR shares pursuant to the amalgamation. And also a couple of MOUs have been signed at the Aero India event. Mishra Dhatu Nigam Limited has entered into an MOU during this event, and that is to benefit in the area of developing and manufacturing aerospace and naval materials R&D exports. Also, Garden Reach has entered into 9 MOUs. HAL has said that they have entered into an expression of interest which has been exchanged between the company and General Atomics Aeronautical System. Also, HAL and Safran has moved forward in the partnership for IMRH engine. Bharat Dynamics has also launched various products at the event, and BEL GSL has also signed MOU to address global market opportunities for the naval platforms. Well, these are the stocks that investors have to keep on their radar for today.
Well, thanks so much for that, Lisa. Let me quickly take it to Vamakshi, who's standing by. She's gone through all the brokerage notes that have come through. Vamakshi, take us through all the important ones.
Well, absolutely. Let's first start off with SAIL. We have a note that has come in from Citi, and they believe that the Q3 numbers for the company were ahead of their estimates. Their adjusted Q3 EBITDA fell by nearly 42% on a year-on-year basis on the back of lower realizations, but sequentially EBITDA rose by nearly 2.7 times on the back of lower costs. They're expecting pricing as well as margin resilience on China's reopening, and on the back of all these positive factors, Citi has gone ahead, maintained a buy on SAIL given a target price of 100 per share. The next stock on our radar is PI Industries. We have a note that is coming in from Citi. They believe that PI Industries reported yet another strong quarter. Strong export performance continues for the company. EBITDA margins at 25.7% were the highest since the first quarter of FY17. On the back of that, they've gone ahead, maintained a buy rating on this stock, given a target price of 4,225 per share. And lastly, watch out for PB Fintech. CLSA has come out with a report on the same, and they believe that the stock performance is aided by a clear clearer path to profitability. Currently, BB Fintech, if we look at the growth rate, is delivering nearly 2 times the industry growth. On the back of that, they've gone ahead, maintained a buy rating on the stock, given a target price of 660 per share.
Well, thank you so much for that, Vamakshi. Now we'll quickly move on to some news coming in from Tata Capital. Now, Tata Capital, the financial services arm of the Tata Group, is understood to be actively evaluating the consolidation of its subsidiaries as a precursor to a potential public issue in 2025. Now, the move is a part of the company's broader plans to meet the revised regulatory framework for its subsidiary, Tata Capital Financial Services, as part of the Reserve Bank of India's scale-based regulations. Now, the board will take a call on whether the consolidated entity will be listed separately or merged under a holding company. Now, Tata Capital is the holding company for the group's 3 lending businesses: Tata Capital Financial Services, Tata Capital Housing Finance, and Tata Clean Tech Capital. And the 3 investment and advisory businesses, namely Tata Securities, Tata Capital Singapore, and Private Equity. Tata Capital Financial Services is registered with the central bank as a non-deposit accepting non-banking financial company.
Well, and sticking with Tata Group, Air India is considering opting for the purchase option for the wide-body aircraft component of its record-breaking aircraft order instead of the more popular leasing option. The creditworthiness of the parent firm, Tata Sons, will allow the airline to raise funds at lower rates of capital for financing the aircraft purchase. Factors such as an increase in lease rentals because of tight aircraft supply, rising demand, and interest rates has made Air India interested in owning a portion of the new fleet. The airline will take a final call near the time of delivery.
And some more news coming in on Vodafone Idea. Vodafone Idea is in talks with lenders for raising funds, have picked up pace with conversion of accrued interest into government equity. And the company's CEO Akshaya Mundra said on Wednesday the company will sue the funds for the expansion of 4G as well as the 5G rollout, he added. Now, he said that he will not be able to give the exact amount of funding, but they are aiming to move towards a regular vendor payment cycle and make the necessary investments. Now, he did not mention any update timeline for the said fundraise or give any indication on whether and how much funds the promoters, UK's Vodafone Group and Aditya Birla Group, will infuse in the cash-strapped telco.
Well, and Nestle is expected to report its results, and price hikes are expected to aid revenue growth. Let's go across to Vinny to decode what else the street is penciling in.
So Nestle is the last FMCG company to report its numbers. We'll be looking at it on a standalone basis, and do not forget it's their Q4 current year 22 numbers. Year-on-year basis, we're expecting to see a decent growth of 15% in terms of revenues, while profits will see a stronger growth of around 61%. But do not forget, last year the base, we are not including the exceptional loss that we saw of 236 crores. So if you include that amount, then comparing that adjusted profit, then it's a muted growth in terms of the profit for the company. Otherwise, in terms of the operational performance, we are expecting the EBITDA to see a growth of 9%, while margins are expected to see a contraction coming in, and EBITDA margins expected at 21.7% versus 22.8%. So 100 basis point contraction in terms of the EBITDA margin of the company. Revenue growth mainly to be aided by the price hikes. Do not forget the price hikes that companies have taken, as well as the distribution expansion that Nestle is doing. So that is supporting the revenue growth of the company. Also, it's expected that the growth momentum will be strong for the company, and especially its out-of-home consumption products that will see a higher contribution coming in from Nestle. So that's a factor we're keeping an eye out on. India business as well as the export business, both are expected to see a strong double-digit growth coming in, while margins, mainly the contraction is obviously for a factor of input costs. Raw material prices have remained quite volatile, so keeping an eye out on that one as well. Let's keep an eye out on commentaries for the trade channels. Rural demand, how is that shaping up? New product pipelines, what is that looking like? As well as the demand trend, especially for the packaged food segment.
And Mercedes-Benz newly appointed MD and CEO Santosh Iyer had sparked a debate a few months ago when he said that the SIPs are the luxury cars' biggest competitor in the country. And now, in an exclusive chat with ET Now, he clarifies on what he meant by his comments. Let's take a look at what he had to say.
What do you think is going to be 2023 like? Because is it the year where people will focus more on SIPs and savings versus EMI?
Yeah, I think post-COVID we definitely saw a bit of, we call it revenge buying kind of a phenomena. A lot of pent-up demand was also there because for the last 2 years the overall market was down. And to add to it, we also launched a couple of new products. So we definitely have seen a very big surge in 22. 23, when I look at January, the order intake has been good. So I think the demand momentum still continues. What we have been trying to do is to increase production because, in post-COVID, consumers were ready to wait for 12 months, 18 months for their car. But now in this new world, they want cars at least in 3 to 6 months time, and that's something quite critical. So our entire focus is how do we increase production, how do we now reduce this waiting period. And a higher waiting period also means lower order intake because,
Right.
as I said, they need cars for some wedding in the family or some birthdays. And if we are unable to provide, then they start feeling, looking out for options,
Other
or
options.
they postpone their purchases. So the entire game for us is now how do we ramp up our production or increase availability and continue to have a good order bank. Coming to savings, I think these are cultural topics. They won't change COVID, post-COVID as fast as what we would wish to. And frankly, I was referring to the top, interesting statistics. Only 4% of US $1 million households own a luxury car in India.
Oh.
This is 60% in Europe or in China, for example. So my reference point was to the $1 million households who still don't invest on a luxury car, but they would like to invest in stock market. Nothing wrong, but at some point you reward yourself, you consume for yourself, and that was the point which of course got out of proportion.
Well, yes, let's switch over. Aman Chauhan of Abacus Asset Managers LLP came on our channel yesterday, and he believes that financials are poised to do well, and the likes of the microfinance players are best placed among the financials. Let's listen in to his views on pharma sector as well.
Within financials, microfinance is something that we like. This sector is coming out of the COVID worries and this very strong growth numbers that we have seen from all the players in this micro segment. That is something that we like. We are incrementally getting positive on auto ancillaries also. So while we don't own a direct auto stock, but we are getting into new names into auto ancillary. Railways manufacturing, clearly there is a good headway for the next 2 to 3 years. The only issue is to get liquidity and to get stock at reasonable prices. So pharma on the fringe is looking good. The kind of companies which got impacted due to higher API prices will now, I think, start to regain the kind of API company numbers which you are seeing where profits have declined by 30-40%. Clearly is going to benefit the pharma companies which use this API. So the next maybe 3-6 months, pharma can also be an interesting sector to look at. One has to be very selective. So out of the 10, say top 10 pharma companies exporting to US or the European markets, maybe only 2 or 3 who have a strong portfolio and maybe a strong brand positioning.
All right, and sticking with the sectors, let's also listen to Gautam Shah, CMT, founder and chief strategist of Goldilocks Premium Research, who expects the Nifty Bank to fall further and remain bearish on the banks.
Second half of last year, we saw a phenomenal rally on the Bank Nifty. I think we had levels of 44, 500. It was great going. Everything participated. And things just changed completely in the last 1.5 months. I think there is a lot more room to fall. Our initial target was around 39,600, which was tested. Anybody looking at the charts would know that it was the important support. From there, we've seen a bit of a bounce. But the Bank Nifty, once again, if you look at the last 5-6 days, it's not been able to take out that level of 42,000. So till that number does not get taken out, we would remain bearish. And we want to believe that eventually 39,600 will break, leading to much lower levels. Again, if you look at the leadership, look at ICICI Bank and SBI, two of the poster boys of the last 2 years, they have stopped outperforming. And HDFC Bank as a stock has just got range bound and it's just languishing just below lifetime highs. Axis Bank, IndusInd Bank, and the PSU banks, obviously the BOBs and the Canara banks of the world, they all have negative setups. So I think banks and Reliance put together would be the reason for the market to break down if it were to happen sometime in the near term.
Right, and quickly we'll take you through news. Fuel prices touch record high in Pakistan as the country struggles to emerge from a financial crisis. PM Shahbaz Sharif hikes petrol and gas prices to an all-time high in order to appease IMF and unlock the critical loan crunch. Tripura is all set to witness a three-cornered fight as the state goes for polls in a single phase today. Fate of more than 250 candidates in the fray. The votes will be counted on the 2nd of March.
And Prime Minister Narendra Modi will virtually inaugurate the Jal Jan Abhiyan in Rajasthan today. Under the campaign, people associated with the Brahma Kumaris Sansthan and the Ministry of Jal Shakti will run a public awareness campaign for 8 months to preserve more than 5,000 water bodies across the country and to build new water bodies. And moving on, India beat West Indies by 6 wickets to notch up their second consecutive win in Women's T20 World Cup. India chased down the target of 119 with 11 balls to spare, with wicketkeeper batter Richa Ghosh top scoring with 44 not out of 32 balls.
Well, with that, we're completely out of time on this show. Of course, the market will carry the action forward. But for now, from Ankita, myself, and everyone who puts the show together, thanks so much for watching.